Happy Tuesday, everybody. As we get talking about cash to close, one of the big questions we're getting is, hey, how do impounds work? So remember, an impound is where you're putting your taxes and insurance monthly in your mortgage payment, right? When you impound a car, you put the car in the lot, you impound in the lot. So here we're impounding your taxes and insurance into your mortgage payment. So all government loans require impounds. FHA, VA, USDA, right? Anything that's a government loan, they require impounds. On conventional loans, if it is less than 10% down or 90% loan to value or more in the state of California, you are required to do impounds. Them's the rules, right? So what does that mean? Now, in an impound account, a couple different things are super key to keep in mind. First and foremost, there's always a 2-month buffer. 2-month buffer, just a little piggy bank of 2 months, the just in case money on any type of impound. Impounds are for taxes and for insurance. And fun fact, FEMA, right? They require that if your property is in a flood zone, no matter what your loan to value is and what type of loan you're doing, that you have an impound for flood insurance as well. So when you purchase a property, you pay your first full year at closing. Now remember also that mortgage payments are paid in arrears. So it's gonna be a little nerdy, you guys. I'm gonna try and talk slowly. Here we go. So let's say we're closing July. It is July 2022. Your first payment is in September because September is paying for August's interest. It's in arrears. It's backwards. It's not rent like forwards. It's in arrears, right? So when we close, we prorate taxes, insurance, interest, but we're paying that first full year of insurance at closing, and our first payment is in September. So how many months of impounds do we need on insurance? Well, we know no matter what, we have a 2-month pad. And we know that that bill is due in July of 2023. So that means that we have to have enough money as of the end of June 2023. So that bill's ready to pay for July, whether you or not you make that July payment. So we'll have September, October, November, December, January, February, March, April, May, June, 10 months of payments, right? So we know that we're gonna make 10 months of payments. We know that the bill is for 12 months, so we need to add 2. And we also know that you need a 2-month pad, so we need to add 2 more. So that by the end of June 2023, there is 14 months essentially ready to go, right? So we said if we're making 10 months of payments, that therefore leaves 4 months of insurance that you're gonna prepay at closing in July of 2022 for that bill that is due in July of 2023. It's even more fun with property taxes. Property taxes in the state of California are due in 2 installments. The first installment is due November 1st, late on December 10th, and the second installment is due on February 1st, late on April 10th. I don't know why it's like 2 months in the second installment, but 1 month on the first one. Who knows? Bananas. It is what it is. So here the same idea applies. We know we need a 2-month pad. We know that closing in July of 2022 means a payment in September of 2022. We also know that bill's due November 1st, so all the money has got to be there in October. So really, for a 6-month bill, that gives us September and October of payments. Now we know we really need 6 months plus 2 months on a pad of 8 months total. So that means we're coming in with 6 months of property taxes at closing in July of 2022 to pay the first installment. That's going to be due again in November, but be ready to pay by October. So hopefully that makes sense. Recapping from the top down, the bills have to have enough money to be paid by the date they're due. You have a grace period of loans, which really means that month before that it's due. There is a 2-month pad on everything. There's always an extra 2-month buffer. And to make matters even more fun, by law, there's an annual review of your impound account. So if you're just buying your property today, July 12th of 2022, chances are your taxes aren't going to be reassessed by the end of the year. The assessors are working faster these days, but sometimes it takes a year for it to be fully reassessed. So when they do that audit of your impound account, they have to do it on the actual tax bill, and you might get a check back. Please don't spend that money. Call me, ask questions, put that aside, because then what's going to happen, they're going to pay that next bill that's due and be like, there's not enough money in your impound account. You're like, yes, because you didn't collect the amount that Austin told you to based on the new tax bill. You did on the regular tax bill, which technically they have to do because that's the only bill that's out, and you're going to be left for the check. Impounds are complicated. They can be super, super convenient, but we got to know those nuances to make them successful. Please let me know what I can do to help you or anyone else. It's Austin at Homeowners Financial. Make it a great day.